to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Rakesh Sharma, ED at Bajaj Auto, joining in. Welcome to the show, Rakesh, and always a pleasure to speak to you as well. Rakesh, couple of things. Clearly, we've seen a strong beat on a consensus estimate basis on the revenue front, on the gross margin front, and realizations have been higher as well this time around. How would you actually define the quarter?
Hi, Hiral. Thank you very much for having me on your show. Well, the quarter of April-June for us was frankly defined almost entirely by managing the semiconductor issue. We've been facing a severe crunch. I must confess, slightly more than what the industry is facing, because we all know that there is the overall shortage of semiconductors, but because of our vendor arrangements of the kind we had, I think we've been hit a little bit harder, and we realized this in February, March. And we, of course, have taken countermeasures to broad base our vendor sources, etc. But that takes time. So we hit a low point in the month of May, but then June is better than May, and July hopefully is better than June. So our impairment to our plan at an overall level was almost 25%. In domestic business, it was 40%, and international business was about 10%. So that's a substantial impairment. The implication of this was that, of course, you have seen the volume decline of 7%, and channel stocks also getting depleted, a little bit of a loss in retail market share. So against this backdrop, revenue has grown by 8% and EBITDAs by 15%. And that really is on account of the pricing decisions which we had taken very, very carefully, both domestic and internationally. The better realization of the Indian rupee from the dollar, which has, of course, helped us a lot, because over 55% of our top line comes in dollar form. So that's and there has been a little bit of softening. That's why you see that despite the minus 7% volume, which is on account of semiconductor shortage, revenues grew and EBITDA grew much faster.
Right. And it's always, I've seen that, whenever domestic markets have been a concern, touch wood, exports have always come to the rescue for a Bajaj Auto. So that's great news on that front. So again, on the export front as well, what are the markets that have actually been working? Because globally, we are seeing a lot of concerns. So how is the export panning out? And do you think this will remain a trend for the next couple of months, where export performance will dominate the domestic market performance for us?
So, Hiral, I think in the immediate short term, because now the supply chain issue has sort of sorted itself out quite a lot, we will see a rapid increase in the domestic business, simply because, we have to replenish the channel stocks. So the channel stocks in motorcycle business need to be about 6 weeks or so, because it's a two-tiered distribution structure. They are right now less than 3 weeks, actually closer to 2 weeks. So we have to not only meet up with this oncoming festive demand, but we have to increase the stock. So we will see a big surge in domestic business. On the other hand, on the exports business, I do expect a short-term turmoil, and that is largely because of the very sharp strengthening of the US dollar with all that which is happening in the US. And whenever that happens, in the short term, the emerging market currencies get rattled. They face severe devaluation, which leads to retail price increases. And more importantly, the shrinkage of the supply of dollars in the market, on the basis of which this trading is done. Of course, this settles down. If I take a 2-year view, we have seen devaluations of 30%, 40%, 50% in many, many markets. And over a period of time, people digest this, it settles down. But in the short term, it does create havoc. And I do see that at least the African side of our business, which is almost over about 50%, we will face this kind of trouble. Latin America is steady, and some parts of Asia like Nepal and Sri Lanka, of course, problem. But other parts are doing pretty well. Philippines, one of our big markets, is doing very well. Bangladesh, steady, but a little bit of devaluation taking place. So I feel in the short term, the big contributor, Africa, will sort of be a bit disturbed. But it should settle down, as has been our experience from the past. It should settle down going beyond the Q2.
Right. And in terms of where channel inventory goes, usually we stock up to 6 weeks, right? And currently, if I'm not mistaken, in the first quarter, it was around 3. Do you think that by the end of the second quarter, we will be back to that 6-week channel stock levels?
Oh, absolutely. That process of rebuilding the stock has already commenced from this month onwards. And in August, it's going to really peak up. And definitely, our objective is to, by middle of September or so, get back to the old levels. In our three-wheeler business, there is, 4 or 5 days of stock in the channel. It should be at least 4 weeks. We have only 4 or 5 days. But there is, of course, a solid booking list. There's a lot of customers have placed orders, and there's a very healthy order book, and we have to satisfy those customers as quickly as possible. So yeah, I would say by as we enter September itself, we should be back to sort of normal.
Right. And overall, if you see a lot of conversations, Rakesh, that were happening around is that entry level bikes is where the challenge is right now. Whereas on the luxury side or the premium side, the sales do look good. Is that something that we're witnessing at Bajaj as well?
Yes, I would say I've been saying that also. The entry level is facing the brunt of the let's say the underperformance in the economic side, and it's nothing but a reflection of how the economy is recovering. The economy is recovering, and its benefits are accruing to the upper half of the demand of the consumer pyramid, and it is only slowly trickling down to the lower half. 70% of our customers earn salaries of less than 40,000-50,000 rupees per month. 70% of our buyers are in that zone, and the economic recovery will probably reach them towards the end. It has started to happen, but it will probably reach them, and that is what is manifesting itself in the much slower recovery of the entry-level bikes.
Right. And then overall, in terms of the EVs, how is that section looking like? Because yes, Chetak volumes have been growing on a sequential basis. Do you think from here on, what percentage of, probably market share are we expecting on the EV segment? And what percentage of revenues would come from EV if you have to look at the next, say, 3 to 5 years?
Yeah. So, in the immediate, our objectives are not really market share and volumetric, because we feel that this transition from ICE to electric is not going to happen in one sweeping sudden stroke. It is going to play itself out for various reasons. And now, the customer needs to be assured, there needs to be a good charging infrastructure, there needs to be, the prices are very high. And cell prices, which had been for 10 years declining at the rate of 5 to 10% per annum, that trend has got reversed. And in the last 1 or 2 years, because of the supply-demand situation, the cell prices actually started increasing. So, that initial cost of acquisition is pretty high despite the subsidy, right? So that's sort of going to retard the pace of the transition. So the transition will happen. I think it is moving in that direction, but the slope has now changed. So, therefore, we feel that it is going to be a long drawn-out game. And our objective, therefore, is to build capabilities which will sustain us. So we are not looking at importing some kits and some models and slapping them together and quickly putting them out in the market without a service center and all that, and grabbing some volume. We feel this transition is very important for us to build the brand, very important for us to build our R&D, to ensure manufacturing, and design and produce the components and the product together. so that we can give a robust solution in the market. It takes time. So that is what we are busy with. We are not really looking at, we don't have a target, frankly speaking, here in our mind that by in the next 3 years, EVs should be X% of the company. We'll take it as it comes. But of course, by the time we enter the year 3, 4, 5, we will certainly be aspiring for leadership. In year 1, let's say this is year 1, year 2, we are focused more on capability, and then we expand, and we will be looking at leadership. Now, where that leadership puts us in terms of the arithmetic of ICE versus EV, we will see how the relative performance is.
Absolutely. There are a lot of ifs and buts and a lot of things to sort out for as well from policy perspective. So overall, it seems to be that it is going to be a good takeoff from here on as well. But thank you, Rakesh, so much for joining us on the show. It's always a pleasure to speak to you. Thank you. Stay safe and speak to you soon again.
Thank you very much.
And I will hope to get you out of your comfort zone on this. Thanks.
I enjoy talking to you.
Thanks. Bye.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.